The country will return to growth next year. Fairly weak growth, probably. Alex Nice, The Economist Intelligence Unit. The Russian Prime Minister expects modest growth in the economy in early 2017 and said the country's inflation rate for 2016 might hit its lowest in recent history. But he followed this by saying the negative trends in the economy over the past 2 to 3 years will exhaust themselves by the year end. What are your thoughts on this?
Broadly speaking, we at the Economist Intelligence Unit agree with the Prime Minister's forecast that the country will return to growth next year, fairly weak growth, probably under 1%. To a certain extent, he is correct that some of the negative trends we've seen are going to start to disappear. The shock from oil prices, which led to the devaluation of the ruble, pushed up inflation in late 2014 and over 2015. But what we're seeing now is that with weak demand and fairly tight monetary policy, inflation is starting to come under control. Bank lending is starting to pick up. Nevertheless, retail sentiment and household sentiment remains fairly weak, and the manufacturing sector as a whole is struggling. Overall, we believe that the growth prospects in the short term are still pretty poor, but following the low base period this year, then we will see some rebound in 2017.
In contrast to the Prime Minister's predictions, the Economics Ministry has adjusted downward its forecast through to 2019. And Russia is now expected to underperform the global economy even more than previously anticipated. Where do your views sit?
I absolutely agree, and I think this is the big story which has been slightly obscured by the big fall we saw in output in 2015 as a result of the oil price shock, which is, of course, as an oil-based economy, there was going to be a hit to growth in the short term. But more fundamentally, we've seen a fall in the potential growth outlook for the Russian economy, and that's linked more to structural issues, the lack of reform, the lack of competition, and the growing role of the state, and also political risk, all of which are restraining investment and are likely, in our view, to keep growth at under 2% a year in the medium term, which, as you say, means that the Russian economy will fall as a share of world GDP.
US hedge funds continue to bet on further improvement in the Russian ruble, implying confidence in the currency's ability to extend its recent gains. Do you think this bullish performance of the ruble will continue?
I think there are certain arguments in favour of that. For a start, we're seeing the outflow of capital from Russia is declining. The effectiveness of sanctions seems to be waning on companies which aren't specifically affected by EU and US sanctions. That means increased borrowing and increased capital inflows to the corporate sector. And also, our view is that oil prices are likely to tick up in the final quarter of the year and into 2017, and that tends to put upward pressure on the ruble against the dollar.
Thank you for joining us, Alex. That's all for our coverage on Russia today. But for everything else, stay with us here on Dugoscopy TV.